Just like to say good morning to all of those who have taken time to participate in today's webinar. It's a pleasure to be with you. My name is Aaron Starks. I am Vice President of Business Services at the World Trade Center here in Utah. Today we have a great webinar planned in conjunction with some of our state partners, Marla Trollan and her team at the Small Business Administration, as well as Senator Lee's very own Justin Anthony, who has been a great voice for business and outreach here in the state, and also joined by Trent McFadden today. And Trent, we appreciate you joining us. Before we jump into it, let me just provide a brief introduction to who we are at World Trade Center Utah. We are a private organization focused on helping businesses accelerate their growth internationally. We are a voice of helping with advocacy, but also helping to clear the path as you're dealing with the complexity of moving your business from Salt Lake City or Laverkin or wherever that may be here in the great state of Utah to a foreign market. We offer various programs and services to help fulfill our mission, including grants that we give to companies in an effort to help offset the costs incurred while going international. We offer trade missions in conjunctions with the Governor's Office of Economic Development. But we really focus on helping businesses make informed decisions regarding their international strategy, helping them both assess their own capabilities, resources, preparation, and risk tolerance, and then understanding who we're targeting in a foreign market, helping them understand a buyer persona. In other words, helping them know why a consumer would choose their brand over competitors in a foreign market. And then from there, delivering great market research, custom tailored to your product and industry, so that by the end of this process, you walk away informed and confident in your ability to go and compete and win overseas. We have a great team that supports us, and helping us make this possible in the great state of Utah is the SBA. I love the SBA for their impact, for their services, for their resources and programs. Their footprint and contribution to the state has been immeasurable. And we appreciate Marla and her leadership. Marla, I'm going to go ahead and turn this over to you. Thanks so much.
Thank you, Aaron. And thank you so much to the World Trade Center Utah for hosting us this morning. We really do appreciate it. We'd like to start off with the two senators' offices. So Justin, would you like to go first?
Yeah, absolutely. Thank you so much, Marla. Thank you, Aaron, and a huge shout out to World Trade Center Utah and SBA for hosting this webinar today. Obviously a very important and timely discussion. And so we're very happy to be involved, and we appreciate the invite to be involved as well. My name is Justin Anthony. I serve as Senator Mike Lee's Business Outreach Director. I'm based in Salt Lake City, Utah, and in non-COVID years, I spend my time traveling around the state to all 29 counties, meeting with businesses, chambers of commerce, economic development departments to learn how legislation that we're running or legislation that other members are running are affecting the business community, as well as to hear how regulations are affecting them, as well as to work with businesses on a one-on-one basis if they're struggling with a federal agency, struggling to get answers from a federal agency. I'll cover that section here a little bit more in a minute. But once COVID kind of took off, pretty much shifted everything to Zoom. So it was a lot of Zoom meetings, as I'm sure has been the case for all of you. But we also partnered with World Trade Center Utah, the SBA, Department of Commerce, Senator Romney's office, because we realized that there was an absolute, mad rush of information that was coming to everybody from the local level, from the state level, and from the federal level. And so we worked together as a team to consolidate that information, put it into 1 or 2 pages to send out to the business community through each of our individual networks. Obviously, we each have different reaches, and we wanted to make sure that same information was getting out to as many people as possible. So it was a great partnership, and frankly, very unique here in the state to have all of us working together to make sure that information was getting out. Also had the opportunity to travel with the SBA when allowed to do so due to COVID protocols. We're allowed to get out and meet with businesses and host roundtables across the state to hear from businesses and chambers of commerce and economic development directors and local leaders on how programs that we passed were working in practice, right? So when we pass legislation, we believe it's going to have one effect. But there are times when we go out in the community and talk with businesses and leaders and find out that maybe it's not having that exact effect and not working exactly how we thought or we wanted it to do. So that's really when you start to see changes and amendments to legislation. I think you've seen quite a few happening on the PPP side of things, but really appreciate these types of discussions because that's truly when we hear and understand what's working and what's not. So I'm going to turn it over to Trent here in a moment to cover the specifics of the most recent legislative package that was signed by the president. But want to first talk about our constituent services as well as a quick update on what's going on the PPP expansion side or extension side, excuse me. So with constituent services, this is a kind of a lesser known role of each member of Congress, but each member of Congress has a team called a casework team, and those individuals are there to help individuals navigate federal agencies on a one-on-one basis. So if you, as an individual, have not received your economic impact payment, or you are waiting for your EIDL to be processed, or waiting for your Social Security benefit to be processed, whatever it might be, you can reach out to your member of Congress, ask for assistance. We send you a consent form, you send it back, and we can serve as your liaison between you and the agency. A very unique thing is Senator Lee and Senator Romney actually share this casework team. We house 5 individuals on that team here in our office, and Senator Romney hosts 5 up in his office. This has not been done before, but when Senator Romney took office about just over 2 years ago now, we decided to merge these 2 teams because we thought it would be very beneficial for Utahns that they could be able to reach out to either senator and receive the same type of constituent service for regardless of what issue that they're working on. So we're very excited about that, very excited about the partnership, and let that be a shameless plug to please reach out if there's anything we can do to help you. Again, whether it's economic impact, Social Security benefits, VA related work, Centers for Medicaid and Medicare and Medicaid services, whatever it may be, please reach out and I'll put my email in the chat here. Last thing I'll cover is the PPP extension. If you guys are following this closely, the House passed the extension last week or the week before. The Senate began taking this issue up last night and invoked cloture, which is essentially limiting debate on the issue. Senate brought it up again today, and I believe they're on their 3rd amendment, and will then, after this amendment, proceed to a final vote on the matter. I can't obviously say for sure as the vote hasn't happened, but we expect that this extension will take place, which will mean that rather than March 31st being the last day to apply and April being the last time to be approved for that loan, the date of application will go to May 31st. So you will have until May 31st to apply, and the SBA will have till June to approve that. This is definitely big for those who were more specifically in the shuttered venue operators grant type situation where they weren't previously eligible if they wanted to take advantage of that grant to apply for the PPP because they didn't do both. We fixed that in the most recent round of legislation that we passed a few weeks ago. So this does give a little bit more time for individuals who are wanting to take advantage of the PPP to do so. But I will also say, if you want to take advantage of the PPP, don't wait, get your application in, talk with your lender and make sure that that's getting processed just so that you're able to get those funds as quick as possible. So with that, I'll go ahead and turn it over to Trent to cover the most recent economic package that was passed and the details there. But certainly appreciate you all and appreciate you guys taking time to sign on today. So thank you.
Thanks, Justin, and thanks World Trade Center Utah for hosting, and Marla and the SBA for helping Utah businesses. Again, I'm Trent. I am with Senator Romney's office, based here in DC. I am a junior policy advisor for economic policy, focusing most specifically on small business and labor issues. And yeah, so as Justin said, I just want to briefly go over some of the provisions from the American Rescue Plan, President Biden's $1.9 trillion package that was just recently passed. Want to go over those provisions that have the potential to impact you outside of all of the SBA provisions, which Marla is going to cover here in just a minute. So some of the things that could impact you as restaurant operators and small business owners. There are 2 payroll tax credits that were originally implemented as part of COVID legislation back in 2020, but that have now been modified in the American Rescue Plan, and that is the paid sick and family leave provisions and the employee retention tax credit. And I'll go into a little bit more detail here in just a second. One other area that the American Rescue Plan changed that could potentially impact your employees if you are not providing employer-sponsored health insurance coverage is an increase in ACA premium credits. So individuals who are purchasing insurance coverage through the Affordable Care Act exchanges might qualify now for higher premium credits. And so they would have to pay less out of pocket for their health insurance. Obviously, again, this is for your employees, but it might be something that you would want to direct them to if you have employees who maybe haven't had coverage for the COVID pandemic or anything else. There's also changes to COBRA if you have employees who end up having to leave and then they're somehow qualified for COBRA. There are changes to how that program is administered. The American Rescue Plan also modified how your EIDL advances, your economic injury disaster loan advances, will be treated in your taxes, as well as restaurant revitalization grants. So the IRS had previously issued guidance indicating that if you received an EIDL grant, and Marla can speak better to this, that it would be included in your income and would be treated as taxable income. The American Rescue Plan modified that. And then obviously one of the most widely spoken about provisions is the unemployment insurance extension. The American Rescue Plan extended the federal add-on to state unemployment insurance at $300 per week. So that's on top of Utah's existing unemployment insurance amount, is a $300 federal contribution, and that goes through September 6th of this year. So as I mentioned, I wanted to get into a little bit more detail on the payroll tax credits for paid leave and the employee retention tax credit. So when the CARES Act was initially rolled out, it created this paid leave provision where you as an employer could provide up to 10 days of paid leave for your employees, and you would receive a tax credit back for that. Originally, the credit was set to expire April 1st of this year, but the American Rescue Plan extended that through September 30th. It also reset the 10-day limit. So if you had an employee who perhaps they had to take their 10 days of paid leave last year to care for a child who had contracted COVID, or maybe a family member and they were under a quarantine order, but then they contract COVID or maybe another family member after April 1st of this year, that 10-day limit is actually reset. And so they could have gotten 10 days last year, and if they have a qualifying event after April 1st this year, then they could have another 10 days of paid leave. It also the CARES Act originally only allowed that paid leave for people who, again, were either subject to quarantine or had contracted COVID or who were caring for family members. It was limited to about $200 per day if you were caring for family members, $511 if you were personally affected. But the American Rescue Plan expanded eligibility. So if you have an employee who is getting the coronavirus vaccine and they qualify for paid leave, the vaccine is an eligible use. Or if they have long-term effects, maybe they didn't take paid leave previously, but now they have so they're one of those COVID long haulers, then you can actually provide for them up to 10 days of paid leave. And then the employee retention tax credit, initially it might not have seemed that some of you may have been eligible because under the CARES Act, the employers who had received PPP loans were not eligible to participate in the Employee Retention Tax Credit program. But the American Rescue Plan and other COVID legislation from December changed that. So employers who receive PPP loans can also qualify for employee retention tax credits. CARES had originally limited the employee retention tax credit to $5,000 per employee per year. So in 2020, each employee was only, you would have only gotten up to $5,000 in refundable tax credits for this ERTC. But December legislation modified that, so it changed it from $5,000 per employee per year to $7,000 per employee per quarter, which is a significant increase. The December legislation made it so that it was up to $14,000 for the year for the first and second quarter of the year. And then the American Rescue Plan extended it not just for the first 2 quarters of 2021, but through the end of the year. So it went from $5,000 for 2020, $14,000 for 2021, and now the American Rescue Plan has made it $28,000 for 2020. You're eligible, again, not if you're eligible if you received a PPP loan or you didn't. You had to have had a full or partial shutdown of your business related to COVID, or a significant decline in gross revenues. And I think obviously you can figure out more information about that. It was 20%, it was 50% decline in revenues under the CARES Act, and now it's a 20% decline under the American Rescue Plan. And I'll leave it there. A lot of minutia, a lot of details about these federal programs, perhaps more than most of you wanted to know. But again, we're working for you here in DC to try and minimize some of the negative impacts of COVID and government efforts to get out from under this COVID-19 pandemic. If you have anything that you need, please, again, in the same way that Justin said, reach out to Senator Lee's office. We're working closely together, and we would love to help any way that we can. With that, I'll turn it back over to you, Marla. Thanks.
Thank you. Now, good morning, everyone, and thank you all for joining us this morning. A special thank you to Justin and Trent for joining us for this webinar presentation this morning. We have a very close working relationship with both of the senators' offices here in Utah, which only benefits our small business owners. And then a special thank you to Hannah and the World Trade Center Utah for hosting us this morning. We do appreciate that as well. So I know we all are going to be focusing on the restaurant grant program this morning. We have limited information on this grant, but we're going to try to highlight as much of that information as we can in this presentation. It will be shared with you. I think Hannah's going to send it out to all of those that are on the webinar this morning. And then I briefly want to touch on some of the other SBA funding opportunities out there for you all to take advantage of and maybe do some combined funding and that type of thing. So as mentioned, I'm Marla Trollan. I'm the director of SBA here in Utah, and you know, my door's always open. My always checking emails, so don't hesitate to reach out to me directly. So you can see here our SBA COVID programs that were established under the stimulus packages. We have our Paycheck Protection Program, of course, PPP. Most of you are familiar with that. We had a first draw that started last spring. We have the second draw as well that opened up with the latest stimulus packages. And that just means a small business owner can apply for a second PPP loan. And with our PPP program, last year, under the first round of funding, we did about $5.2 billion here in Utah in PPP loans alone. That doesn't include EIDL and our advances and other things. And then since it opened up again in January, so about a week ago, we've done another $1.4 billion. So it's a very successful program, and hope you all are able to take advantage of it. We also have our economic injury disaster loans, or what we refer to as EIDL. We have a targeted EIDL advance or grant that it was called earlier. We have our shuttered venue operator grants, and of course our restaurant grants that will be rolling out shortly. Shuttered venue grants will be opening up on April 8th, and then the restaurant grant hopefully will be soon thereafter. We have made some subsidy payments that have been applied to existing SBA loans through the stimulus packages, as well as enhancements to our traditional lending programs through our 7A loans and our 504 loans. Okay, next slide. So under the Economic Aid Act funding, Congress increased our appropriations for small businesses by $325 billion. $285 billion about was specifically for PPP loans. And then we had $15 billion for the shuttered venue grant, as well as $20 billion for the targeted EIDL advance, some debt relief programs and whatnot. Okay, next slide. Under the American Rescue Plan Act that was just passed, that was referred to by Trent earlier, that increased appropriations to small businesses by another $55 billion nationwide. It included over $7 billion more for PPP loans. And as Justin mentioned, the PPP loans are likely going to be, the deadline is likely going to get extended to the end of May. And then SBA would have till the end of June to be able to approve those loans, providing that passes the Senate here today or shortly. It also included over $1 billion more for the shuttered venue grant. So again, now we're up to about over $16 billion for that grant, and a significant amount for our restaurant grant. You can see $28.6 billion for that. Additional $15 billion for the targeted EIDL advance, and then $100 million for a community navigator pilot program. Okay, next slide. So restaurant grants, I know that's what we're here for this morning. Again, you can see the breakdown in funding there. This restaurant grant will be administered through our Office of Disaster Assistance. They're the ones that have administered the EIDL loans, or the economic injury disaster loans, as well as the EIDL advances. They're going to, like I said, launch the Shutter Venue Grant Program on April 8th. And then hopefully the portal will open for the restaurant grant shortly thereafter. I do want to say that it took quite a bit of time for them to set up the Shutter Venue Grant Program through OMB and all the hoops they had to go through. It's not an easy process to get grant programs established in the federal government, but they were able to do that relatively quickly. So that grant, again, is rolling out April 8th. I think the restaurant grant program and the portal will open shortly thereafter, given that they've already gone through all the hoops and they know how to get that grant, another grant established. You can see there $5 billion is going to be set aside for eligible entities with gross receipts during 2019 of not more than $500,000. Okay, and then the $23.6 billion will be distributed in an equitable manner. Again, it's going to be first come, first serve. But you can see there during the first 21 days, we're going to prioritize for women-controlled businesses, veteran businesses, those socially and economically disadvantaged small businesses. So that would include our 8A firms across the state, self-certification and that type of thing. The covered period for the restaurant grant is February 15th, 2020 through December 31st, 2021. Okay, next slide. Eligible entities under the restaurant grant. Again, it's pretty broad, which is nice. It includes restaurants, caterers, food stands, food trucks, food carts, saloons, inns, taverns, bars, lounges, brew pubs, tasting rooms, tap rooms, pretty much just about anything you can think of. It also includes entity types located in the airport terminals, or tribally owned. So any of those small businesses that may have been established in the new airport, they're now eligible tribal businesses as well. Ineligible entities, those businesses that are operated under a state or local government are ineligible. Entities that own and operate more than 20 locations as of March 13th, 2020. Entities that have a pending application for or received a shuttered venue grant. So again, keep that in mind. That's going to be important in looking at the two different grant options. And then publicly traded entities. Okay, next slide. Grant awards. So they're going to be equal to the pandemic-related revenue loss of an entity. And then the maximum amount to an entity and its affiliates would be up to 10 million. So 5 million per physical location. Grants will be awarded in the order of applications received. Applicants can certify the uncertainty of the economic conditions. So they're going to have to prove this through their application process. And then again, we're prioritizing specific target audiences during the first 21 days. Pandemic related revenue loss is equal to the gross receipts during 2020, and then subtract that from the gross receipts in 2019. And I'll talk about gross receipts in a bit here. If an entity is not in operation in all of 2019, then you're going to want to look at the average monthly gross receipts in 2020, multiply that times 12. Okay, and then subtract from the average monthly gross receipts in 2019 and multiply that by 12. If you're opened after December 31st, 2019, you're going to look at the expenses incurred minus gross receipts received, okay? And then losses are reduced by first draw and second draw loans as it pertains to PPP loans, say. Okay, next slide. The use of the grant proceeds, pretty broad in scope here. You can see the list, payroll costs, payments for principal and interest on mortgages, rent payments, utilities, maintenance expenses, supplies, food and beverage expenses, covered supplier costs, operational expenses, paid sick leave, etc. Okay, next slide. Shuttered venue grant. So again, we will have more information on the restaurant grant as the SBA works on the policies and procedures for that specific grant. But I did want to just highlight the information that we do have now. And again, Hannah will share this presentation with all of you. So the Shuttered Venue Grant, as I mentioned, rolls out April 8th. The business types that are eligible to receive this grant would be live venue operators and promoters, theater producers, live performing arts organizations, museums, zoos, aquariums, motion picture theater operators, talent representatives. They needed to be fully operational on February 29th, 2020, okay? The gross to earned revenue loss, they need to demonstrate that they had that of at least 25%, and then compare one quarter in 2020 to the same quarter in 2019. Okay, that's going to be important for folks to demonstrate. They must show that they intend to resume operations, and they can't be controlled by an entity on the National Securities Exchange. You can see there the breakdown of full-time versus part-time employees. And then the first 60 days, $2 billion will be set aside for businesses with no more than 50 employees. Okay, next slide. Thank you. So eligible entities, this is just a little bit more specific for those entities I mentioned earlier. And I guess I don't need to touch on each one of these, but again, take a look at this list if you are interested in applying for the Shuttered Venue Grant. Okay, next slide. So an applicant won't qualify for the Shuttered Venue Grant if If you do not have a place of business in the US, or you're operating primarily outside of the US. You won't qualify if you present live performances or sell products of any sort of sexual nature. You receive more than 10% of your 2019 gross revenue from the federal government. If you own or operate venues or agencies in more than one country or more than 10 states, and or have had more than 500 employees as of February 29th, 2020. You also won't qualify if you have 5 affiliates who have already received a Shuttered Venue grant. So you're going to need to coordinate with those affiliates, and you can see that last bullet there. The same thing applies. So if you're a museum with affiliates and you've already received 10 million affiliates combo, then you won't qualify. Okay, next slide. The amount of the grants go up to 10 million. There will be a second round of grants, up to 50% the amount of the first grant. So if you were in operation on January 1st, 2019, the grant amount is 45% of the gross earned revenue in 2019. If you were in operation after January 1st, 2019, the grant amount is the average monthly gross earned revenue for each month in operation in 2019, then you multiply that by 6. If you received a PPP loan, whether it's first or second draw, then it will be subtracted from your Shuttered Venue grant, okay? So as Justin mentioned, we're likely gonna extend this out, the deadline for PPP loans. If that happens, then you will have an opportunity to get both a PPP loan and a Shuttered Venue grant. I'm thinking that a lot of this similar information will apply to the restaurant grant. We don't know for certain, but that would just be our initial assessment. And then the grants can be dispersed whether they're in installments or a lump sum. So as I mentioned earlier, we want to make a distinction between gross earned revenue and gross revenue, okay? So you can see there, gross revenue is equivalent to receipts. And that could be through contributions, donations, or grants from other sources. Whereas gross earned revenue would be monies received from the sale of goods or services that you provide, whether that's admission tickets, merchandise, food and beverages, advertising sales, etc. Okay, next slide. Application for the Shuttered Venue grant. During the first 14 days, the grant will be awarded only to eligible entities that have 90% or greater revenue loss. And then in the next 14 days, it will be for eligible entities with 70% or greater revenue loss. And then the revenue loss is based on the period from April 1st through December 31st, 2019 and 2020. Now, I do want to say $16+ billion sounds like a lot of money, but it really isn't when you look at it nationwide. And so we really want to encourage our businesses to be ready to roll with their applications and all their supporting documentation when these portals open. So whether it's a Shuttered Venue grant on April 8th, start preparing now, get your documents together. Or whether it's a restaurant grant, when that portal opens, we'll be sure to let you all know. But for the Shuttered Venue grant, you need to have a DUNS number, and it takes about 2 weeks to get a DUNS number if you don't have one yet. So keep that in mind. You should be looking at that right now to get that number in place. It's going to be required when you apply. You can also register in the SAM system, and you can see the link there. Again, start gathering your documentation on the number of employees and monthly revenues, floor plans, contracts, etc., and then determine your gross earned revenue loss experienced during the last 2 years, 2019 and 2020. They did provide, and we have that online, a shuttered venue application checklist. I'm quite certain they're going to do the same thing for the restaurant grant. So you may want to take a look at that, even if you're thinking about applying for the restaurant grant. I would guess a lot of that same information will apply for the restaurant grant as well, okay? And then you can stay up to date on our SBA website, but also sign up for our newsletters that we distribute via email here in Utah. We're updating those newsletters on a daily basis, just about, with new information that rolls out on our various funding programs. Okay, next slide. Okay, the use of proceeds, again, very broad in scope. You can see the laundry list there: payroll, rent, utilities, mortgage. You can also use it for state and local taxes and fees, operating leases, insurance payments, advertising. And you can see there the prohibited expenses, which would be real estate. So you want to purchase real estate, you can't use it for that. You can't use it for relending or payments on loans after February 15, 2020. Next slide. Okay, so there's the information on the Shuttered Venue Grant. There will be a national webinar on March 30th, and we will have this link in this presentation that Hannah will be sending out to all of you. Okay, next slide. Paycheck protection, I'm just going to touch on this quickly. Most folks are familiar with this by now. The Paycheck Protection Program, as mentioned, we rolled that out last spring, but we had the update roll out in January. So a first and second draw loan, those are different. A first draw is the first time applying for a PPP versus a second draw, which is you're applying for another PPP loan. So for eligible entities that are both, it has to be 500 employees or fewer. But if it's a second draw, you have to have less than 300 employees. Okay, and eligible entities also include partnerships, LLCs, corporations, sole proprietors, independent contractors, tribal businesses, agricultural businesses, and nonprofits. Okay, next slide. So under the new stimulus that passed, we have new eligible entities, which also include local newspapers, radio, television stations, destination marketing organizations, and that's laid out there, 501c3 nonprofits, as well as internet publishing organizations. Okay, next slide. Use of loan proceeds can be used, they should be used primarily for payroll costs. In fact, you can see that last bullet there. At least 60% for payroll costs if you want to receive full forgiveness on your PPP loan, so keep that in mind. And payroll costs include salary, wages, vacation, sick leave, healthcare, retirement, group insurance payments, etc. But you can also use it for mortgage interest payment, rent, utilities, interest. You can use it to refinance an idle loan, operation expenditures, property damage, supplier costs, etc. But again, keep in mind that 60% rule for full forgiveness on the loan. And you can work with your lender on the forgiveness benefits if you have specific questions. Okay, next slide. The first draw loans go up to $10 million, a maturity of 5 years, 1% interest rate, payment deferment until the borrower obtains loan forgiveness, or 10 months, whichever is earlier. Next slide. And if it's a second draw PPP loan, it only goes up to $2 million. Okay. Again, the same length of maturity, interest rate. And then just keep this in mind for seasonal employers, they may use any 12-week period of their choosing from February 15th, 2019 to February 15th, 2020. Okay, next slide. Additional requirements you can see there. Again, keep in mind not more than 300 employees if you plan to apply for a second PPP loan. You also need to demonstrate at least a 25% reduction in gross receipts between the same quarters in 2019 as 2020. So you can't take a quarter two in 2019 and compare it to a quarter for in 2020, it has to be the same quarter. Okay, next slide. Application process, so find a PPP lender. We have over 435 lenders now doing SBA loans throughout our state, and more are coming on board every day, which is great. We have a couple of different forms there that you can fill out. It's a 2483 form that you'll want for the PPP, but keep in mind the second draw has a -SD after it. So you want to make sure you're using the right form depending on whether you're getting a first draw or second draw. You'll want to gather all your payroll documentation. Again, this is going to be critical for the forgiveness portion of it. And you're going to have your required certifications and gather your revenue loss documentation and that type of thing. Okay, next slide. Economic injury disaster loans. So we have the Office of Disaster Assistance has been offering these loans for a number of years. And in fact, we provide more funding for natural disasters than even FEMA does. And we've been doing this for a long, long time. But this is the first time where we've had to deal with an economic disaster. And so kind of had to shift gears and come up with new policies and procedures for our EIDL loans. Again, these are administered by the Office of Disaster Assistance and not our SBA lenders. So eligible entities include small businesses, 500 employees or less is the standard for SBA. Also nonprofit organizations or small ag co-ops. You have to, the credit elsewhere requirement, you have to demonstrate that you don't have credit elsewhere. That still applies. It doesn't apply with the PPP, however. The amount goes up to $500,000 to cover up to 24 months of economic injury. So that's been, that number has increased as well as the number of months just recently. The interest rate is 3.75 for small businesses and 2.75 for nonprofits, but keep in mind the maturity is 30 years versus the 5 years with the PPP. So the payments are going to be quite a bit lower. And then we also have a complete payment deferment. Okay, next slide. Use of proceeds, you can see there, it's a little more restricted than the PPP, but you can use it for fixed debts, payroll, accounts payable, and other bills. But you can't use it to refinance long-term debt, okay? You have to have an acceptable credit history. So some folks are wondering, small businesses are wondering, why didn't I qualify for an EIDL loan? They will want to look at the credit score, and it has to be generally above 550. So keep that in mind. And you have to be able to demonstrate that you can repay it as well. Okay, next slide. Payment deferments. So this is relatively new. For SBA disaster loans made in the calendar year 2020, they don't have to make the first payment until it's been extended from 12 months to 24 months from the date that you received the loan, which is pretty substantial. And then for those loans made in 2021, the first payment deferment is extended from 12 months to 18 months from the date of the loan. Okay, next slide. Targeted EIDL advance. So this is a little different than what we had for the first go around. This is very targeted as of right now, specific to low income communities. So SBA is reaching out to those small business owners in low income communities that may have already received a portion of the targeted EIDL advance the first go around. So say they only received $2,000. If they're located in a low income community, SBA will go back and give them the additional $8,000, okay? There is a map online on SBA's website where you can go in and see whether or not you're located in a low income community, how we define it, okay? So I'm not going to get into the nuts and bolts of this, but certainly if you have any specific questions as it pertains to targeted EIDL, feel free to reach out to us. Okay, next slide. Okay, lending enhancements. So again, through the stimulus packages, we've been able to make emergency enhancements to our traditional loan programs. And you can see there that includes our 7A and our 504 loans, as well as our micro loan program. And you'll be able to receive this presentation as a reference. Okay, next slide. Subsidy payments for existing SBA loans. Again, we've made some enhancements there as well. Next slide. And then the resources. So we have our small business development centers. We have 15 of them located throughout the state. We also have 2 women's business centers. Those centers are all funded by the SBA, and they are there to help small business owners walk through their applications, develop business plans, marketing plans, whatever that might be. And this counseling is completely free. It's a free resource for all of you. So if you're specifically looking at the restaurant grant, say, and you have specific questions on maybe documentation that you're gathering or how to fill out the application when we roll it out, please reach out to the SBDC network and or the women's business centers that we have available in our state. Next slide. But I also want to provide our contact information in the district office. You know, I have a staff of lending relations specialists, economic development specialists, outreach and marketing specialists, et cetera. And so all of those folks are available to help you out as well. So we have a general phone number there, a general email box, as well as the information from the Office of Disaster Assistance and the various websites. But I do want to let folks know that I have access to leadership in ODA. So if you're ever in a bind as it pertains to your EIDL loan, your restaurant grant, your shuttered venue grant, or maybe even the targeted EIDL advance, let me know, and then I can send an email on to leadership in ODA, and they will respond right away. Okay. So with that, I'm going to turn it back over to Hannah so we can help answer some questions. Thanks.
Great. Thank you so much for that presentation. It has been so awesome. Someone asked if their credit has been impacted by COVID. It seems a little bit tricky. Are there any workarounds to the credit requirements?
So as it pertains to the economic injury disaster loans, they're still going to be looking at the credit scores. I also have access now, which I didn't have until last Friday. I have access now to the EIDL portal, so I can go in and look up loans, and it, it'll flag, credit scores. So I'll be able to get back to a business owner and let them know if their credit score is not high enough. However, the PPP loans, the shuttered venue grants, the restaurant grants, all of those are going to provide a lot more flexibility in terms of credit score. Okay.
Great, thank you. And I know that John already answered this to the person who asked, but just so that everyone can hear it, do tips count as qualified wages for the hospitality industry?
Yes, they do. Under the definition of payroll costs, it does include cash tips and equivalent.
Perfect. These are all the questions that I'm seeing right now that haven't been answered. So thank you guys so much for being active on the chat, on the Q&A functions. I'll stall for a second just to see if someone else has a last minute question. But thank you for this information. I know our Utah businesses really appreciate it, and we really appreciate your partnership in spreading the word on this. And if there are no more questions, then I'll just close by thank you guys again. Thank you, Justin and Trent, so much for being here. Oh, here's one. What are the colors on the policy map to see if their area is eligible for the targeted EIDL?
So did they go into the mapping tool and then see
Mhm.
different colors. And I can't remember what I think there's like a dark red or something that shows what the low income communities would be.
Perfect. So
Would be
the dark
level.
red is likely going to be the eligible for targeted EIDL, correct?
Right.
Yep.
Perfect.
And one thing I just want to mention, because I know we have a lot of restaurant owners on this morning, we will provide another webinar certainly once we get more information on the restaurant grant. So another training will be forthcoming, just so you all know. Okay.
Perfect. Let me just make sure I'm not skipping anything else. Perfect. Okay, thank you so much again for this information. To all the attendees, I will be sending this recording along with the presentations and contact information this afternoon. So you guys should get that in your inbox this afternoon. Thank you so much for joining us and best of luck. Thank you guys so much.
Yeah, thanks. Bye-bye.